Our data is the opposite of the negative tone that Mark and some of your other guests today have had. The economy, our portfolio companies are doing really, really well. This is the best quarter for revenue growth in the whole 7 years we've had the index. Second best quarter in terms of earnings. Keep in mind that's pre-tax earnings, so we don't look at any effect from the changes in the tax law. And the momentum seems very strong. The U.S. domestic economy is very strong despite tariffs, despite interest rates.
Are you seeing any differentiations in that between sectors? Are there perhaps some sectors that might be more impacted or trying to keep a tighter rein on cost control?
Well, absolutely. I think that we continue to see margin expansion in the technology area, primarily business services, mission-critical software businesses. And the industrial sectors had some margin compression this month. Healthcare, when healthcare services have had margin compression and a lot of cost problems for years, this quarter, healthcare services are continuing their gradual improvement off of their bottoms. The most striking information, I think, or the most striking data is on the consumer side. Despite gasoline prices being up 18%, despite interest costs going up, the consumer is staying very, very strong.
Lawrence, I just want to call our viewers' attention to the fact that we are now down about 230, 240 points in the Dow Jones Industrial Average, a leg lower in just the last 5 minutes or so. But as we kind of put that into context, this has to be an opportunistic time for people out there who have money on the sidelines. Talk to us about some of the trends that you're seeing perhaps in the technology, in communication services, because they are among some of the hardest hit, and perhaps they could be some of those value-oriented picks given what we've seen over the last couple of days.
Well, let's separate valuation from earnings growth. The earnings growth is coming from productivity-enhancing businesses, productivity-enhancing software and technologies. As we see continuing wage pressures, and it's not just wages, it's fringe costs too, in the tight labor market, there's really increasing payback for improving productivity. And I think that the growth in productivity-enhancing businesses and investments, particularly with the favorable treatment of capital expenditures under current tax laws, a place we'll continue to see earnings growth.